Ladies and gentlemen, good day and welcome to the Vikran Engineering Limited call Q2 FY26 earnings hosted by Adfactors PR. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Mr. Rakesh Markedkar, Promoter, Chairman, and Managing Director from Vikran Engineering. Thank you, and over to you, sir.
Good afternoon, everyone. This is Rakesh Markedkar. I am promoter and chairman and managing director of Vikran Engineering Limited. We are Thane-based engineering procurement and construction company. I extend a warm welcome to all the participants joining our maiden earning conference call post our successful listing. We are deeply grateful for the trust and confidence our investors have placed in us. Today on this call, we have Mr. Nakul Markedkar, full-time director, Mr. Ashish Bhayati, our Chief Financial Officer, Mr. Vipul Markedkar, Chief Business Officer, and the Adfactors IR team, our Investor Relations Advisor. I hope you had a chance to go through the financial results, investor presentations, and the earning release uploaded on stock exchanges and on the company website. Since this is our first earning call, let me begin with a brief overview of Vikran Engineering Limited. We are one of the fastest growing India engineering procurement and construction company in terms of last 2 years revenue growth. Our business model is centered around delivering comprehensive engineering, procurement and construction solution across the key infrastructure sectors such as power, water, solar and railway. We provide end-to-end services encompassing conceptualization, detail engineering, procurement, supply, installation, testing, and commissioning, all executed on turnkey basis. Since beginning of our that family, we take over this in November 2014. The Markedkar family acquired ownership, making a new beginning of the business. At the same year, we received the very first extra high voltage substation order from Madhya Pradesh Transmission Company of 157 crores, which laid the foundation for our growth in the power infrastructure sector. So I'm very happy to state that right from the beginning for the 9 years, whatever the project we are executing, we are closing the projects as per the schedule. So we then branded as Vikran Engineering, reflecting our growth engineering and project execution capability. Over the following years, we executed several landmark power transmission and distribution projects across India. By 2019, we have successfully executed one of the major electrification projects, demonstrated our capability to manage large-scale assignments involving extensive network coverage and installation. The same year, we also secured a significant substation order from the Power Grid Corporation of India Limited, making a key milestone in our journey and reinforcing our position as a trusted partner in the power infrastructure space. In the following years, Vikran Engineering Limited steadily expanded its presence across multiple infrastructure verticals. We executed key power transmission substation projects while leading the state's utility, including assignment linked to the Mumbai-Ahmedabad bullet train corridor, while also undertaking large-scale rural electrification and distribution initiatives. Building into the momentum in 2021, we diversified into the water infrastructure segment under the government's Har Jal Yojana and subsequently ventured into railway electrification, further broadening our capability. Our partnership with marquee clients such as NTPC reflects with the trust we have earned through consistent project delivery. In August 2025, Vikran Engineering Limited achieved a major milestone with its successful initial public offering. The issue received an overwhelming response from the investors across all categories, reflecting a strong confidence in our business model, execution capability, and growth prospect. Through this listing, we are not only strengthening our capital base but also marked a new chapter in our journey as a public listed company. The proceeds from the IPO are being strategically deployed to enhance our working capital, expand operational capability, and further strengthening our positioning in the EPC infrastructure space. I am happy to share that recently we have awarded two prestigious turnkey EPC contracts in the solar segment. A 355 crore project from Elum Energy, MS Solar One Private Limited for a 100 megawatt solar power project in Maharashtra, and subsequently a very big leap to our growth journey is another big order of 1642 crore single project from Carbon Minus Maharashtra One Project Limited. This landmark wins marks our formal entry into the solar EPC space and align perfectly into our strategy to diversify into renewable energy. Together, these projects significantly enhance our presence in the clean energy ecosystem and underscore the growth confidence that leading developers have in Vikran engineering, technical expertise, execution strength, and proven track record in delivering large-scale infrastructure projects. Looking ahead, the infrastructure sector outlook remains highly encouraging, supported by the strong structural and policy tailwinds both globally and in India. The global drive to expand electricity access, especially across emerging regions, is expected to spur significant investment in transmission distribution network, creating opportunity for EPC players with strong execution capabilities. In India, healthy economic growth, policy stability, and increased infrastructure spending are set to benefit the power, water, and utility sectors. Continued focus on electrification, renewable energy, and urban infrastructure provides a robust multi-year growth runway for companies like Vikran Engineering Limited to operate across these segments. Meanwhile, the renewable energy sector, particularly solar, is emerging as a major growth catalyst. With India targeting 500 gigawatt of renewable capacity by 2030, solar EPC, grid integration, and transmission infrastructure are seeing strong traction. For Vikran Engineering, the energy transition presents a promising avenue for diversification and value creation, leveraging our expertise in power transmission, power evacuation to continue to India's clean energy ambition. So with this capability, we are covering the complete the infrastructure network in 22 states with our team size of 850 professionals across the board, and we have a very centralized 170 professionals sitting at Thane office. We have our own design and engineering capability in civil, electrical, mechanical, instrumentation, signaling, telecommunication, which is really giving us a very huge confidence to execute the infrastructure projects in all the three verticals like powers, including solar, water, and railway segments. So this, our in-house capability of design and engineering and execution of the project is giving us confidence for maintaining our track record of the early completion of the projects, and the way we are getting recognition from our clients like Power Grid Corporation Limited, India Limited, NTPC, and for the continuously confidence given by our key customers like Power Grid Corporation Limited, where we have executed the project of the highest system voltage in the country up to the 765 kV. That too we have delivered ahead of the schedule, and we got a recognition from all our major customers. So, coming to our half-yearly performance, the first half of the FY26 marked steady progress for the company with the healthy year-on-year revenue growth and a meaningful expansion in EBITDA margin. This performance underscores our disciplined execution, operational efficiency, and prudent cost management. Our order book has been strengthened over the last year, providing clear visibility for the upcoming quarters. With execution momentum gaining space and new project wins across key infrastructure segments, we are well positioned to deliver a stronger performance in the second half. As of today, 2025, our total order book is more than 4,000 crores, providing strong revenue visibility for the coming quarters. The power transmission distribution segment continues to be our key growth driver, accounting to about 82% of the order book, followed by the water segment with 17%. The balance is contributed by the railway infrastructure. This diversification order mix reflects our execution strength across multiple infrastructure verticals and positions us well to capitalize our sectoral opportunities. The second half of the year remains pivotal for EPC execution, and we expect this momentum to continue into FY26. With a strong and diversified order pipeline and the deepening presence across critical infrastructure segment, we are poised to take a larger, more strategic project in the coming quarters. Our wavering focus on execution excellence, quality delivery, and operational rigor continue to build customer trust and elevate our performance standard. Reflecting our consistent performance and financial prudence, India Rating has upgraded our credit rating to A- stable. The proceeds from our IPO are being effectively utilized to support working capital needs and the execution of the ongoing as well as the newly secured projects, exactly as envisaged in the time of listing. At the time of listing, looking ahead, we remain confident of sustaining our growth trajectory, backed by a robust order book, a favorable industry outlook, and our continuous focus on execution excellence. As a part of our strategy growth roadmap, we aim to expand into infrastructure EPC projects within the private sector, explore opportunity across international markets, particularly in Africa and Middle East, strengthen our presence in the water segment, where we are already pre-qualified and actively bidding for irrigation projects. We also plan to pursue opportunity in emerging areas such as data center and smart metering, while continuing to participate in key government initiatives, including the revamped distribution sector scheme, that is RDSS, the National Solar Mission, the Swachh Bharat Mission, and high-speed rail corridor developments. With this initiative, we are confident of achieving sustained and profitable growth, expanding our geographical footprint, and further consolidating Vikran Engineering Limited position as a trusted and diversified EPC player in India and beyond. Now we will open for the floor for questions, and I request our CFO, Mr. Ashish Bhai, to give the highlights of the financial performance of H1.
Good afternoon, everyone. I hope you have got a chance to look at the results. As we have discussed, our overall top-line revenue was 176 crore, which has improved by around 13.6% as compared to last year. And in H1, actually, the overall revenue has increased by 13.6%. EBITDA margin has also improved, though it is in line with our overall financials for the whole year. But yes, for the quarter, we have got a better result as compared to last H1 as well as the Q2. In PAT also, you can see there is a improvement as compared to 6.3 crore in H1 of FY25. We have improved it to 14.8 crore. And overall, as we can see, with the improvement in the credit rating, we can expect further improvement in our interest rate and finance costs going forward. So this is what overall financial performance is, and we are open for the questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mihir from Trust Mutual Fund. Please go ahead.
Yeah, hi, thanks for giving the opportunity. Am I audible?
Yes, sir. Please continue.
Yeah, sure. Yeah, sir, congratulations on this order win, quite large order book now.
Thank you
Wanted
very
to
much.
understand on the... Thank you, sir. Thank you, sir. Yes, sir. Yes. So basically, with this order on the solar EPC side, good the order, sir. And, generally there is a thought that solar EPC has, 10% EBITDA margins, and the payment terms are also little elongated. If you can provide some clarity over here as to, how are the margins and payment terms, for these two large orders, and, how are we going to ensure execution? Because now 2,000 crores large order book, a large order win versus, very historically, the order book number was different. So operationally, how are we going to make sure that these projects get executed over the next 10 to 12 months, which is what the period is?
Sure. Thank you very much. Very nice question is being asked. See, let me the brief you the strategy of Vikran always is whenever we enter for any big project, we prepare it for at minimum for 1 year. For even this particular projects also, the solar, my team, we have formed a very big team comprising of very stalwart and the senior professionals from the industry, number one. And then we were particularly talking on this project for last 4 to 5 months. We have done a complete due diligence, site surveys, and since this is a very lucrative project from government of Maharashtra, they are providing the land, and this falls under the scheme of government of Maharashtra, where this LIC scheme, lift irrigation scheme, they are providing the land, and this is all hurdle free. And this this is non-DCR the modules, and that is the pricing is better, and the margins are much more better in what we from the industry now today. So this is what we can see, because we always believe in bringing the highest margin orders. This is in the history of Vikran Engineering. That is the reason we are not only we are bringing the high profit margin orders in our kitty, we are also executing in time to maintain and improve that profitability further. So for this project also, we whatever the expectations the investors have, we will be able to give a better profitability in this area, and the EBITDA margin is much better than what we are narrating now. And this is the best in the industry, because we have, after a lot of research and hard work, we could able to get this order.
Okay, so this is what the unfinished project which was there. Was the project stuck so that we are getting now good margins for that project? How to understand?
See, please repeat your question.
So basically, as to what is the reason that we are getting good margins for this project? Is it the case?
Yeah, because we have done the costing, and because we have discussed with the developer, and then since our payment terms and then our confidence, we are back up with the suppliers and the panel manufacturer tie-ups, that assurances, timely delivery of supply, and our execution capability, and our tying up with the executor, with the subcontractors, we are sure to maintain this the margins, and that is well estimated, well established margins are there. Only thing we need to execute this in the timeline of given 11 months, for which we are known. So this is basically the major in the 3 districts of the Jalna, Dharashiva, and Solapur. And that land is already available. In fact, our team is deployed at site, already deployed at site. So even before accepting this order, we did a lot of homework. So we are confident to maintaining this profitability and timeline of execution.
Sure, understood. How are the payment terms for this project?
So
are we going to get in advance?
Yeah. So yes, we are expecting some advance as well, but that will depend on the what BG we are having availability, and based on that, in terms of payment terms, it is again the EPC contract. So as and when we are executing the project, we are expecting to receive the funds from the client.
Okay, understood. Sure. And just last question, any broader color given the order now, how should we see FY26, FY27 in terms of revenue and profitability? Any broad cut numbers around that?
Yeah, so as we've discussed, so now whatever fundraise we have done, so the main reason was for this fundraise to get these new orders. You can see that order book is just got doubled, and in similar way, we will also expand our revenues accordingly. And maybe in current financial year, because if it is a half year, we are utilizing this money, and then by next year, the full year, we will be having to utilize this money. So accordingly, we will increase our revenue targets accordingly.
Sure. That's it from my side. Thank you very much.
Thank you. Ashish, sir, your voice is coming little distant.
Okay.
Yeah, you can come here. Yeah.
Thank you. The next question is from the line of Adarsh from Negen Capital. Please go ahead.
Hello, am I audible?
Yes,
Yes.
please.
Yeah. Sir, thank you for giving me the opportunity and congratulations on the great listing and order book. I just wanted to understand if you could give me a segment-wise revenue and margin split for the recent half. And also I wanted to know if there's going to be if you're expecting an increase in contribution from any particular segment.
Yeah. So overall, these are not segments. These are like 3 verticals we are having. So in terms of H1, the more thrust was on power, because as of now,
Okay.
in the power side, we have more order book. So
Right.
if you exclude the solar part, which is just recently we have got in the last 1.5 months. Before that, solar T&D was almost having about 70-75% of the total execution and the revenue, and balance 25% approximate was from water and railway infra. And going forward, we can see that yes, solar will also contribute to the overall top line, and H2 definitely the breakup will be more towards solar and as well as in power.
Okay.
In terms of
And
in terms of total order book, as of now, you can say that around 50% of our order book is with solar, around 32% is power T&D, and balance 18% is with water and railway infra.
got it. And what are our margins in these particular verticals? How are our margins looking like?
We don't look at the margins specifically for a segment. We look at project wise. So and
Okay.
we do those projects wherever the margins are good. So our margins more or less will remain in similar range. Though in railway and infra we are getting slightly less margin, and that's why that is a small portion of our overall order book. But apart from that, you can say that whatever new orders of solar also we have got should give us a good ROE, and we expect our overall margins to remain in what we have generated in last 2-3 years in that range.
Okay. And I just want to understand that you are saying that the contribution from the solar solar vertical is going to increase. So could you give us some guidance on for the next 2 years on how are you bidding for the projects, or how are the projects being received? The orders?
Sure. See, as a very internal discipline and strategy of Vikran Engineering, though we are in the 4 segment, but our main focus on the profitable orders and the orders with the better payment terms and conditions. We are very disciplined, and that is the reason for the last 3 years, the margins are one of the best in the industry. So we are continuing that discipline of getting the orders, the profitable order. In the same connection, in the same way, even the solar also. So we are focusing with a good private developers who have, and we are negotiating with the better terms and condition and profitability, using our strength of execution capability, because the developer also wanted to execute their projects in time, and Vikran is known for our execution capability and timely completion of the project. So with that confidence and credibility using Vikran's execution capability, we continue to talk to the developers, private developer. At the same time, we are also quoting with the good government clients like NTPC and NHPC, And then there is a good project, the bid is in pipeline, and we are expecting some more better results in coming months.
Okay, sir. That's with my questions. Thank you, and all the best.
Thank you very much.
Thank you. The next question is from the line of Divyansh Thakur from Fintrust Capital. Please go ahead.
Sir, congratulations on a great set of numbers. I wanted to ask that if we see that the margins were 17% in some quarters before, and now it has fallen to 14%. I wanted to ask why have they fallen, and what are the sustainable margins are we looking in the future?
The margins, the overall margins are actually, you can see that the percentage of turnover in generally in H1, because of the government budgetaries will be issued and the seasonal issues because of the rainy season, the overall part of turnover will be just 1/4 to 1/3 of the total turnover of the year. So that's how generally the bifurcation of H1 and H2 will happen as per our past trend. So that's where to absorb some of the fixed cost like employee cost, the EBITDA margin looks slightly lower in H1, but once H2 the overall turnover will go higher, our EBITDA margin will look better because of those fixed cost absorption will be better.
So, what are the sustainable margins for the full year that we are looking at? And
So
can you just explain me the H1 and H2 in percentage terms? I was not able to hear you properly.
So generally our H1 is about 25 to 30% of the total turnover of the year as per the past trend. And the margins, what you are saying for the full year, as we discussed, it should remain, we are expecting it to remain in the similar line as it was in last 3 financial years.
Okay. Sir, one more question. So you raised around 541 crores for working capital requirements. I wanted to ask how much business can we expect from this without any additional working capital requirement?
Sorry, how much?
How much business will be acquired?
Okay. So that will again depend on the working capital requirement of the project. However, we are expecting that, previously we were using about 300 to 400 crore of working capital for the 900 crore of business. So in similar line, if we go, probably we can reach up to around 2,500 crore of turnover approximately without raising any further working capital requirement. And from the current working capital, we have raised through IPO.
Okay, sir. That's all from my side. All the best for future endeavors.
Thank you.
Thank you. The next question is from the line of Naman Parmar from Nivisha Investments. Please go ahead.
Yeah, hello. Hi. Good afternoon. Thank you so much for the opportunity. Firstly, I wanted to understand on the order bid pipeline. So currently, how is your order bid pipeline? Also, if you can give order on the basis of how much kV is from the power side, basically.
Yeah.
How much is from 765 kV and on.
Right. So, first of all, thank you very much. Let me give you the brief of our what strategy, what we operate for the order book. First of all, we always maintain a very good balance with the execution, the working capital raise, and the order book. So now today, since we have raised the working capital and that our execution capability means team is also strengthened to utilize that working capital. And if you see that even as you compare the current position with the last year vis-a-vis, we have just doubled our order book. So this is the very first indication of our the growth, the rate. So coming to so currently we are at 4,000 plus unexecuted order book in our hand. And apart from this, there's another 3,000 to 4,000 crores. We have already, the bids are in pipeline, we already bidded there. and keeping our track record of maintaining 20 to 22% of our winning ratio. So we are confident to get some very good order, and we will be surpassing the order book targets of this our financial year. And coming to the very specific, you asked the question, how far with the 765 kV and 400 kV. So the same line, we are bidding with the Power Grid Corporation and other places, even the private players now. We are getting inquiries from the big private players where they want the evacuation of their solar mega solar power plants in terms of 765 kV and 400 kV evacuation the system comprising of substation and transmission line. We already quoted, and we are in the process of quoting. So we will be maintaining the same ratio of the order book, that approximately that the T&D and solar put together will be around 80%, and the remaining 18% approximately from the other water infrastructure and the railway. So we are hopefully, not only we will be, as we already doubled our order book as compared to the same time for the previous year, we continue to maintain the same things since we have a working capital with us, and now the good order already, we have bidded good tenders, so we are very confident to maintaining that whatever the targets we are kept for to generate the revenue as projected.
So out of 32% that you have told for T&D, how much would be for 765 kV, higher kV class?
Actually, mostly we are quoting for the high voltage now only. So, and then as I told you, we as a company policy, we really look the particular order profitability, irrespective of what voltage level is there. So for me, since we already developed our technical credential up to 765 kV, for me, the project with 400 kV and better margin is more important than the 765 kV with the thinner margin. So what we keep always as a strategy of the company, we always focus on the individual project what we are bidding. The margin is a focus, and the same thing, cash flow is a focus. So, but we in the T&D mostly extra high voltage will be approximately 50%. And the sub-transmission and then the 132 kV and the lower voltage will be the approximately 50%.
Understood. And this order book is executable in how much time? 4,000?
This current order book what we are having, that has to be executed in 18 months. And whatever the new order comes now in the T&D, that also they ranges from 18 to 24 months.
Okay, understood.
So with this current order book, we have a very clear visibility of this financial year's revenue and even for the next financial year revenue.
Yeah, understood. Secondly, on the cash flow side, that in the H1 that you have done around 166 crore of negative cash flow, right? So you have been paying your trade payables very early. So what was the reason for that? Can you elaborate, and how well you will be getting to positive cash flow in the coming year?
So mainly since we have the working capital as of now, and it's being a seller's market for some of the equipment, we were able to get a good, you can say, cash discount, and that's how we, you can say the creditors have gone slightly lower. Overall capacity, as we have said that, yes, this working capital deployment will take about around a year to deploy completely. And once that is deployed, probably from FY28 onwards, you can say that, yes, you will start looking at the positive cash flows from there.
Okay, understood. And lastly, on the lead time on the various equipment.
I request you to rejoin the question queue.
Only, okay, yeah. Done. Yeah. Thank you so much.
Thank you. I request each participant to ask 2 questions from now on. The next question is from the line of Anuj Jain from Globe Capital. Please go ahead.
Hi, sir. Good afternoon. Congratulations on the good set of numbers. Just can you give me some color on the trade receivable parts, because at the end of March financial year 25, we had 634 odd crores of receivables with a top line of 900 odd crores. and currently we are having receivable of 613 odd crores on a top line of half yearly of 340 odd crores. So can you just give me some color on such high receivables and what we are doing about that?
Yeah. So, generally, I mean, if you see overall in terms of these receivables, mainly, it also includes the retention portion. So whatever work we are doing as a EPC company, some of the money will stay there for the time we complete the project and hand it over, and even sometimes LP is completed. So that's where some of the money is there. Apart from that, yes, our receivables are going down as compared to March. Has came down by around 20 crores, and further we are expected to this to improve here. However, as we increase our turnover, especially on Q4, again these numbers will be slightly higher by end of March, and again it will come down by December. So that's how generally the trend is in terms of receivables. However, if you see our report of the breakup, there are no receivables which are like pending more than 1 year except for the retention portion.
So
That's
what is
where
the retention portion? What is the
receivables
retention portion?
the receivable health is fine. There is no stuck receivable as such.
No, what is the retention portion that you have said?
It will be about 10% against each bill.
10%. Hello?
Yeah, generally it will be about 10% against each bill.
So out of 600, I can roughly say 60 odd crores is the retention part. So my receivable would be 550 odd crores.
It will not be like that. It is 10%. It's not a part of debtor. It is part of the total work we have done for the project. So let's say if we at one point of time, if 90% of the project is completed, so that 90% of the work done, 10% of that is be a part of retention. So that's how retention is calculated.
So currently these debtors are almost like 8 months, 8-month cycle. So what kind of cycle which we are comfortable with going forward?
So see, cycle-wise, yes, we generally try to see that because we are working with most of the government sector organizations.
Right.
So we are generally getting these normal RA bill within 2 to 3 months. However, there are some specific areas where the amount will take slightly more time if it is linked to completion of some activity or if it is a retention portion. So apart from that, we are getting normal payment regularly.
Okay. And second question is, can you give me some color on our cost of borrowing? Because in the first half we had incurred 33 odd crores of finance costs, and on the borrowing side we have 300 odd crores of short-term borrowing. So can you give me color on our finance costs? It looks like pretty high, and we are having rating of A minus. So as per those standards, this looks pretty high.
Yeah, that's right. So A minus we have just received, and the impact of A minus we will see going forward. As of now, whatever finance cost is you're looking at is one is finance cost. Apart from that, whatever non-fund based limits we are using, especially on the bank guarantees, that is also part of the finance cost, and that is a non-fund based limit. So that's where you will not see in the debt, but that cost will also be part of finance cost.
So what is the rate of interest?
Of interest, generally from our banking arrangement, we are getting around 10%.
10%. So we have quite high utilization of those non-fund based limit which we are seeing as per this standard.
So we have to provide BGs against whatever projects we need to take. So there we need to use those non-fund based limits.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Neelam Sharma from Nuvama PCG. Please go ahead.
Hi, sorry.
Sir, can you please speak a little louder? We can't hear you properly.
Hi, am I audible now?
Yes, please.
Yes, sir.
Yeah. First of all, the correction is name is Nishant Sharma from Nuvama PCG. Secondly, sir, many congratulations for very strong set of numbers. Just a couple of questions from my side. One on the retention portion in the receivable. So what's the retention portion right now, which is sitting in the receivable? And within what time frame we get this money back?
The retention portion is approximately, it will be about 160, 170 crore of retention money will be there. And the expectation is, it will not related to a particular project. The moment we keep working and completing those projects, we keep getting these retention amount as and when, and as well as the new retention amount will keep adding into the debtors amount going forward.
Right.
So that's how the more work we are doing, and if the retention percentage remains same, you will see that yes, retention portion is keep increasing. However, as per our track record, since we have completed almost all projects either on time or some of the projects ahead of the schedule, we have never faced any major issue in getting this retention in our 10-year history. And that's where we are confident that we'll keep getting this on time.
All right, sir. So as soon as we complete the project, we are getting this retention money back, or after completion also they keep it for some time?
Yes. So if there is a default liability period, DLP, which is generally maybe 6 months to 1 year, so till that time we may have to keep the retention, some of the projects.
All right, sir. So just a request, if it is possible going forward, if you can mention every time that this is the retention money out of the receivable, if you can show that as a separate item, because looking at your historical record, completing on time with the quality, this is more like a firm number which is likely to come back. So it can help us understand by reducing that kind of a working capital requirement or something like that. So just a request, if it is possible to show it as a separate line item. That's one. The other question would be related to the each margin differential in each of the three division. Like as the solar share may be rising, can we see some correction in the margins going forward, or will it be more like similar in going forward as well?
So in terms of margin, as we have discussed that, whatever project we are undertaking or choosing, we are targeting for better margin projects only. That you can see that as compared to our industry peers in past 3 years, our margins were better, and the company is trying to do the similar way going forward as well. In solar also, yes, you're saying is as compared to generally the industry trend is yes, the margins are lower in solar. However, we have chosen those projects where we are getting better margins. It may impact very nominal, maybe 1 or 2% here and there, but apart from that, we expect that overall in the portfolio, even the solar being added, there should not be any major impact in the margins going forward also.
Okay, so if we are focusing more on the profitable margins, then in that sense, our bidding pipeline or the order pipeline would also be little lower and the win ratio may be higher. Will there be is there a fair assumption?
Yeah, since we very disciplinarily we are maintaining that the project quoting with this margins, so we very selectively quote, right? And at the same time, now there is a competition also there, but we select the geography, we select all the project keeping the competition in mind, geography in mind, and then we see what would be the competition. So keeping all these things, but our win ratio is consistently we are maintaining around 20 to 22%. So we bid very carefully. Like for example, if some good project is there, now we try to do something other than conventional way. Like this is the example of recent 2 projects what we got in the solar. There's the solar, there is a n number of companies are bidding. But we have targeted only few projects that to we work very hard, then we convince them, we have shown lot of interest, our execution capability, and far better margin project we got it. This is one of the strategies. Similarly, for the government also, whether it is the Northeast, whether it is Jammu and Kashmir, and whether it is industrial corridor project, which we already bidded. So these projects, we do hard work, we do detail engineering, we do detail survey, and with the less competition, and we have quoted some good projects, margins. So this is what as we are going very perfectly with our strategy, though we are spending much time and energy and money during the bidding, but we are sure we bring the good margin projects with us.
Okay, sir. Is there a possibility to share what kind of a bidding pipeline that we currently...
I request you to rejoin the queue for the follow-up.
It was just an extension, ma'am.
Sorry, sir, but there are many participants left in the queue.
Okay, fine. Thank you.
Much, yes.
The next question is from the line of Shrey Gandhi from CR Kothari and Sons. Please go ahead.
Thank you for the opportunity. My first question is regarding the order win. Just wanted to know how many sites will cover in this EPC order.
Can you speak slightly louder? It's very, your voice is very slow.
Yeah, I was just asking that how many sites have we got in this recent order of solar EPC?
Yeah. So this solar EPC, this is the majority is covered. Hello?
Yes, sir.
So, shall we continue with the same question, please?
Yeah, hello.
Yeah. So I was replying to your question, how many sites? Actually, these are the three districts of Maharashtra, Jalna, Dharashiva, and Solapur. Though the number of sites are more, but some of the the positive thing is here, it is a land is government provided, and now this has already acquired the land. And these are small project sites, somewhere 5 megawatt, 10 megawatt, somewhere the biggest was 91 megawatt in one place. So this is, the idea is here, you deploy multiple of teams independently, they can work, they can finish the job in time, and they can move to the new project sites. So that the waiting and see that the hurdles and all this ROW, these kind of problems are not there in these projects. So this is what is the beauty of this kind of project. So that is the reason that we are confident to execute this within the given time limits of 11 months.
Okay, so how do we plan to execute the order? Like, what part of...
We have a big team of execution. So, in our company itself, we have 850 professionals on our roll. Apart from this, we have site supervisors, engineers, deputy managers, material control managers, and the supply chain, the professionals. They deployed at site, and they, since the surveys and all is already done, and then even before accepting the order, we have done a lot of preparatory work. So it is now we already deployed some of the teams, and this is on every week basis, we'll be continually pushing some more execution teams at site. So the strategy here is deploy around 35 to 40 project teams at site at a time to give it a better progress.
Okay, got it. And the revenue will be recognized by per site when we complete it, or it will be recognized?
See, this is what the milestone based the project. Once you supply the material, once you do some erection work, civil work, that framework, the structure work, every moment there are the payment terms are there. So this is linked with the site progress.
Okay, and my next question is how much unbilled revenue do we have currently, actual, which is not yet received but the execution has been completed?
Yeah, just 1 second. So this contract assets and contract revenue system we have. So based on some of the projects, if the billing is less than the overall work done or the cost incurred, that will have you will find it in current assets. The total would be about 400 crores approximately. And there are some projects which are the billing is going ahead as compared to the cost incurred. You will find it in the contract liabilities as well. Some of the amount from 25-50 crore will be there as well.
Okay, got it. And just to get any ballpark number which you are thinking of, like revenue, in revenue terms for this year or maybe next year, including the execution for solar.
With the overall working capital of about, the investment of around 400 odd crores, we could reach to 900 turnover. So with this additional working capital, probably for the half year, we can grow from here for the 7 months, and next year definitely we can reach to the overall target where the working capital is invested and probably will be 2,000 crore plus.
Okay. Got it. Thank you so much for answering, and all the best for your group.
Thank you.
Thank you. I request each participant to ask one question. The next question is from the line of Pawan Kumar from Shade Capital. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes.
Yeah, Pawanji, please go ahead.
Yeah, first of all, congratulations for a very good set of numbers. And my only question is, are you looking for orders from non-government sector? Can you give some color on your bidding pipeline, if you really think so?
See, as we mentioned, now since we got a verification in the sectors, at the same time we have a good technical credential, now financial credential is there, we have a very strong balance sheet, and now that we qualified mostly at our own. Yeah. So now we have a clear visibility for the profitable orders in almost all the sectors, including private we are targeting now. So we are targeting private customers in the power and the solar. At the same time, many industrial development projects are there. Our teams are also working for that same line. Because whatever the current team we are having, we already got competence in the civil, we got competence in the water, power, and the industrial project, and we are targeting for the project in the same premises like industrial corridor project, which we can utilize our all competence in one place, and that too in the 40 to 50 acre area for industrial corridor development. So these type of projects also we are targeting.
Okay, and sir, from the current order book, what is the proportion of non-government orders?
So that is 50-50 approximately.
Okay. Thank you. These are my questions. Thank you.
Thank you very much.
The next question is on the line of Pranjal Mukhija from Growth Sphere Ventures. Please go ahead.
Yeah, hi. I'm audible.
Yes, please.
So thank you for giving me this opportunity, and congratulations on a great set of numbers. So since we're trying to explore opportunities on the solar side, I just had one question related to this. Sir, I just wanted the management's comment on this recent announcement that had come out by the government, whereby it's directed all the renewable energy implementing agencies like your SECIs, NTPCs, NHPCs, and SGVMs of the world to basically close all legacy bids and cancel letter of awards for all renewable energy projects, which projects like power and PPAs and PSAs are not feasible. Yeah. So I just wanted to understand, does this impact us? What kind of implications does this announcement have for the entire sector? And generally, just your comment on that.
Yeah. See, that the government initiative is very clear. They wanted to keep in mind. So whatever there's a pending pipeline that the project which is not signed with PPA, government wanted to push them. And then they wanted to understand the genuineness of this the project which is not signed PPA yet. So the idea is they should remove the difficulties of these the hurdles, or if that is not able to remove those hurdles, they wanted to clear it by end of November. And they say if you are not able to resolve it, close it and retender it, or you signed the PPA as soon as possible. The main intention of government here is don't keep the things which shows in pipeline as not workable. And but our whatever project we have got, this is nothing to with that slot and those projects. So that are not that we have bidded these the project which is falling under these slots. So absolutely we are non-affected, not at all affected with that decision on that program. That is separate initiatives where the n number of things were shown in pipeline, but there is a progress. There is practically no progress.
But sir, since these four agencies, I mean, there's an order agencies in terms of the bigger tenders that come out in solar. I just wanted to understand like what kind of an impact will this have on the demand side, especially given like I think only some 23 gigawatt kind of PPAs have been signed, and I think the capacity is some like northward of 90 gigawatts. So
the idea was, in some of the cases, there was a very issue of the clearance in clearing the policy matter itself. So the government wanted to resolve that on the priority, and that was the whole direction is that you please concentrate on this rather than that opening the new slots. That is the whole message is there. And then this is not new. The government has given indication with the long back, and the officers are working in the same direction.
So this does not affect our future.
Not at all.
Not
at all. Right. And there is a huge business is coming now in the private. And now that this is just beginning with the new DCR, the modules, and the government now bringing the initiatives. And now this green energy momentum is really started in place now. And we have hardly utilized any capacity in India. We are much behind that our neighboring country like China. So this initiative of the green energy has taken a good momentum, and that is the reason we find it is a huge potential for the execution company like us. See, we have everything solution available in one basket. Not only the setting up the solar power plant, also we have the solution for the most difficult part of that is the power evacuation to the 765 kV and 400 kV substation and transmission line network. The private players, they are looking for a company who can really give that complete end-to-end solution to that. So we are one of them.
Right. And just secondly, I wanted to understand on the ISTS part, I mean, do we foresee any challenges there going forward?
But please repeat your question.
Yeah, I just wanted to understand, like going forward, do we foresee any challenges on the interstate transmission part? Because again, I think that's also a huge backlog.
Now, let's see, the government is very much focusing on the development of the transmission network, sub-transmission network, and the revamping of existing network. And there is not central government, the state government, nodal agency, they are all putting their efforts, because there is a huge more than approximately 300 GW energy now has to the generated through the renewable, and that same thing evacuation has to be done. So this is the both way on the infrastructure front as well as the generation front. Government is putting their best effort to bring this in the through the government and plus government-private partnership. So the complete machinery of the government and the private big developers and the big business houses, they are all putting their efforts, not only that putting that the renewable and the power plant setup, also they are concentrating on complete supply chain of this the renewable system, like including manufacturing of the panels, manufacturing of the cells and other essential elements. So the good momentum is started. So there is no challenge practically. This is the need of hour, and everybody has to act on this. And we are very positive
So
on
do
that.
we so do we have these connections secured, these ISP
Sorry to
connections?
interrupt, sir, but due to time constraints, we will take that as the last question for today. I now hand the conference over to Mr. Rakesh for closing comments.
Yeah. So, thank you very much, all the investors, for the trusting us and continuously putting that confidence on us. And finally, what I just wanted to ensure my investors, we are just begin now. November was our IPO listing, and hardly. So I just wanted to have one small correction to the question was asked, what is our private and government, the order. So the private now it is coming to approximately 60%, not 50. The private is 60 and government is 40. So now I'm concluding my comments. So please, since we have started January by the last month of H1, so the momentum is started, and we are confident to give the correct number, the way we are maintaining our results so far. We are continue to maintain that same thing in terms of the top line, bottom line, and order booking. In terms of the execution capability, we are all set to deliver the better results in coming quarters. Thank you very much.
On behalf of Vikran Engineering Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you very much, please.